Yo, yo. What's good, what's good, what's good?
So I'm making a choice again to put my shoes on early in the morning and get active again. So make the right decision.
I want you to realize that this world, life, is one big head game. And once you learn to play the motherfucking head game, it's no longer a game anymore at all. You can start living your life.
Yo, yo. I'm always saying in the chat, we got some Italians in the chat.
Into the hardest mankind ever created.
Who's gonna carry the votes?
When you go to war with yourself, you find a lot of peace.
How we doing today? How we doing today?
Quit, your mind says we're done. So it doesn't expand. There's no expansion when you quit.
Your mind takes control of you.
Another day, another day. How's everyone doing today? We got a good we had a good trade today. Big movement this morning on gold. Doing good, doing good. Good day. See, we got some Italians in the chat. I don't know what y'all are saying in there, but I see it. I see it. So, y'all, there was a nice trade today. Gold moved crazy this morning. New York session. Just posting in Discord right now. Going live, going live. This morning was good. We had a good trade this morning. Like, gold's been moving good this month. I know it's December market. This and that. Some people's psychology is off this time of the year. I mean, gold's been providing some good opportunities. Less is more. I got the Italy chat today. Slovenia, what's good? I'm here in Toronto. You guys can see in the usual spot, chilling. Caught a good buy on gold today. Want to break that down. It was right before New York session, and the market moved pretty much like the same time today that it moved yesterday. Today there was a big move at like 8 o'clock in the morning. Yesterday also started pretty bullish, like right before 8 o'clock in the morning, and had a pretty strong move up. So one thing is timing with this signal. So I sent a signal today. For those of you guys that are in the inner circle, you should have seen it this morning. It was before New York session, 6:58 in the morning. Gold buys. And that was good timing. I was keeping my eye on the chart. Once I saw this candlestick right here, see this candlestick right here? Now that candlestick was at like 3 in the morning. That was a 3 o'clock candle. You can see that candlestick right there. Nice rejection candlestick. I mean, it came down to 43.08, 43.10. Traded into like a nice area where there was some candlesticks to the left. You can see there was 2 candles. Now this one, I almost sent a trade actually on after this candle, but I waited. But once I saw this candle and I looked at yesterday, I was like, yesterday the market went up New York, like right before New York, the market started like giving a good buy signal. So it was like after that candle, it looked like a good rejection, like how price moved out. If you look at the structure of price, you got this high here. So we made a higher high. So in essence, we took that out. But I'm also like over here, and I know I talked about this on like a previous session. This over here. So it's like a nice accumulation here. I caught a buy here on gold, like literally right here. All targets were hit. Stop loss is at 08. Could have been a decent move even. Still could have been holding. Got out when it hit like 34. But like, still on the charts. You know, less is more this month. If you haven't had a good month, I've only taken myself three losing trades this month. But I've had like this week, for instance, I think I've only taken 3 trades this week. 2 wins, 1 loss. Or was it like we had a so 12.15 2 days ago. Gold buy 42.93, 42.90 area. So I think that was here. So I've literally taken 3, and I could have taken 4 trades this week. Missed out on 1, but took a trade here. That one hit all the take profits and even went beyond. So there's a trade I took here. Sent it as a signal. Let's see. Yeah, 42.93, 42.90 area. So that was like in this candle. That trade hit full take profit. And then this one hit stop loss. I think that one was in here. I think that one was in here. Went in profit a little bit, but this one hit stop loss. So that was like in here looking for buys. Could have sent another trade after that, but then like the next trade I took today was here. So you don't have to overestimate price every time of the day. Like there's gonna be trades. You know, you don't have to force a trade every minute of the day. I've sent 3 signals this week. 2 hit full take profit. Like this was today's trade. This thing pumped. We caught that move. Made a huge candle. So I mean, like, some of you guys take 3 stop losses in a day, right? I've taken 3 stop losses this month. 3 stop losses. Some of you guys are over trading, maybe chasing moves, taking losses that you shouldn't take. You have to learn maybe too how to spread your, like, because you're gonna lose trades in trade. You're gonna lose trades, but this is one of the losses I took this month. And you know, we're December 17th. The other losses were the first week of December. So it's like this spread out, right? And like one losing trade isn't the end. You'll miss moves like probably could have sent a signal down here or maybe somewhere in here. One more trade. There were some moves I caught too, but like today's trade, you can see it was more about like the timing of things, the structure of price. Pretty simple when you look at the structure. You got the low. We ran up, made that high. And you know, we broke out this trend here. We broke all this. And this movement up. I talked about this yesterday when the market was like here, how I like yesterday, if you go back to the analysis I did yesterday, I was saying like we made a higher high. We could come down and potentially make another leg up. I was saying there's going to be another leg up. And I was saying yesterday, it's about this low. Like if anybody was here yesterday, go watch everything I said yesterday and then go look at the market. Because I was talking about this low yesterday, right? We go watch the stream we did yesterday. We talked about like when the market was like right here, if I'm not mistaken. I took a trade live. I took a quick scalp live. I said like wait for it to come down. Maybe I even said wait for it to come down to 4,300 or 4,305. It was like 19 hours ago, if I'm not mistaken, or no, longer than that. 1 day ago. See if I can find it real quick. It was like this. It was 2 streams ago, yesterday. But market structure is like key with this one. Like I mean, there's trend right now. Gold seems strong. Like gold's strong at the moment. The price seems strong. Market structure, trend. When did we break this down? Oops. Oh, I found it. Check out the chat. Slow is fast. Trade what you see. Yeah, trade what you see. Execution. So you don't have to always think in terms of quantity of trades or profit for the trade. It's more or less how's the execution on the trade. I'm just trying to look. I'm trying to look for something real quick, and then I'm gonna break some more stuff down. Cause like yesterday, I was bringing this up a bit on stream. I was like, okay, we broke up, and we made this. It started with this higher high. Like the sequence of this like starts with this higher high that the market made. I forget the exact part. I was on for a little while yesterday, training, talking about stuff. See if I can find it real quick. It was on yesterday's stream. It was a pretty long stream. I think it was in the beginning, literally. It's probably in the beginning then. We did like a lot of training. I even took a trade live on this stream. Like it was like literally like a quick scalp. Oh, you have to dig through the stream, and there's a part where we broke down the market structure, the shift that started happening in price. I started to see it yesterday on this stream. Talking about a lot, but I can't find the exact part that I'm looking for. Maybe I'll find it after. But that was here. Like we made this higher high. Mind you, the trade I took was here today. But the trade I took today was going with the structure behind me. And a lot of stuff I was thinking yesterday. Because I remember yesterday I was talking about this low and how we made that high. And if it starts to pull back, it could hold the low. And if it does, it could make another leg up. And if you look at what the market did from here, it trades up, makes a higher high. What's important is like this here, like to the left, this, Price breaks above that. That's a BOS. That's called a bullish break of structure, or a market structure shift. It's like if you have a downtrend and the market like shifts out of that downtrend. Makes that final lower low. That lower low goes into like a higher high, but you're breaking out of the trend. Now it happens like in two spots. It happens here, like right here you have this spot here that breaks above. So it's like yesterday, today's trade, I started collecting evidence yesterday, to be honest. Like I was on it yesterday. I was keeping on with price, watching what it was doing. But we like I explained this live yesterday. We started to see this yesterday, the shift up in price. I like to see these on gold. We've seen them a lot this year, like the bullish ones especially, where you get a shift out of the trend. Now it even happens like down here. This is where sometimes your eyes have to be able to see like something internal as well, because down here, and I even talked about this, like I'm looking for it on the stream yesterday. There's a part where I talked about two zones yesterday. I was like, there's two zones it could come to yesterday. Like I was talking about this yesterday. I was like, this is probably gonna pull down now, at least to here. But I even have my eyes a little bit lower because there's like this area down here as well. But like from this point, the market moves like this. You don't have to chase it. You have to really wait. When the market moves like this, you have to really wait, because it moving like this can give you kind of some evidence of, okay, we might have just started something. So it's like yesterday I was already thinking like, okay, we're gonna come down for buys on gold once we had like that shift up. Now it pulled back. It pulled back perfectly. Like it hit 43. It literally hit 4,300. So like there was a perfect trading opportunity. Like for those of you guys who are kind of OGs here, everything I teach you, have taught you guys, some of you guys, like a lot of you guys, I mean, for months, right here. And we did break this down yesterday for a little while. Talked about it for a little while, how like what this could turn into. We would visit it from time to time on yesterday's stream, because we were doing a lot of training on scalping here. Like we were looking at like some scalping stuff. But then I was saying, you know, like this could come down. I was saying like this shifted up. It could still come down to form that next leg up. Right? And this is where I was like, all right, there's two areas basically to keep an eye on. And the second one I was saying was a little bit down here. This is when I was going over like, okay, there's two areas. Like I was saying regardless, it should make the move as long as it holds the low. Like yesterday I was saying, like, and I did this in real time. Like you can see this is from yesterday's stream. I was saying like either you're gonna get like that shallow, quicker move up, or it's gonna take like a deeper retracement, find more liquidity, which is exactly what it did. But regardless, like it still made that same exact move up. And that was for this. Like I gave you guys that. Like I broke it down yesterday. Like I've been sending signals here, there, right in the Discord. If you're in my inner circle, they've been consistent. There's only been 3 stop losses this month, and there's been a good amount of like full take profits hit. Not just TP1, TP2. Like we've been hitting some full take profits, some solid moves, even through the month of December. You can see I keep bringing that little goat. End of November, even like end of November, we had some wins coming into December. There was one loss, one win, one loss. And then I went on a win streak for a bit. Took an L last night or yesterday, but last night, you know, you take an L, you bounce back. Last night took an L, tonight bounce back type of shit. But so today's trade was just following the trend that the market stuck with, right? Like there was a perfect trade yesterday. 4,300. I literally like I broke that I broke that down. I broke that down for you guys yesterday. You know, like I'm breaking these like every week. If you guys have been paying attention the last 2-3 weeks, like I've been breaking down charts for you guys like consistently. And like it's been like that through all 2025 for anybody who's just starting to pay attention or tuning in. I don't know if you guys have paid attention though the last couple of weeks. Like the analysis I've done, the things I've talked about have pretty much played out. No ego there, but you know, there's recorded sessions of it live where I talk about it, and you go look a day later or the next day, it's like, okay, we were breaking this all down yesterday for a reason. So like when you're looking at like trending structure, key stuff is like the basics. You want to stick to the basics in trading: market structure, trend, volume, price action, candlesticks. Like all I was doing really here was just following the volume, following price action, following the market structure and trend, right? Higher highs, higher lows. HLs, higher highs, higher lows. Now what's key here and what you gotta train your eyes to see is this here, like this to the left, the you know, that market structure shift. These big moves, if you're not in them, it's okay, because depending on how and where they move, they could set up for that next move up. Might be a bit more probable at times, that next retracement. Mind you, I caught the next leg here today, right? So that trade, today's trade was taken really just going with the structure. Like you can see where price came into. It wicked down here twice, which is like what it did the other night. It's done that 2 nights. It did that here, like wicked down twice. I think it even did that kind of yesterday. Yeah. Simple market structure when you look at this. You know, there's like demand here. That's where the market like last moved from. We came all the way back. We came down enough like into the previous low. So at times it's like you got to play the structure, and it's like looking at, will the structure hold? Like yesterday I was saying, regardless of where the market goes, this low down here should hold. So yesterday I was saying, regardless of like where it goes, whether it comes down more, that low should hold is what I was talking about yesterday. I was saying this low down here, I was saying whether we come here and make the move up, or if we come down more, I was saying it, if we come down, regardless, we should make the same move, because it's kind of just following structure. I don't like to say I'm like betting on, but I'm trading off the fact that of what I see. I'm trading off, you know, okay, I think this low should hold. This low should hold. Based on what price just did, it could come all the way back to the low, and the low should still hold. So when you look at like today, the market made a nice pullback. The last low is here now. It's like you have a low here in your structure. Market structure, right? You have that last low there. Market's moved up. It's come enough back into it. Like if you like Fibonacci retracements, you could take a Fibonacci retracement. You're going to have like almost a 78.6 retracement there. And like look at where price is now. And timing too. It's like, okay, market really pushed up last night into London like going into London session, pre-London session basically, like market was already really bullish in Tokyo last night. And that's kind of where gold might have left, like where you might have missed out on gold yesterday. It's like it left kind of early. I mean, it's not really early because I always say Tokyo session can move for gold. Like gold can move Tokyo session. It can move like before London session. It can move London session. It can move New York session. Pre-London session, we like to say. Like gold moved pretty early on last night. We start dropping. And like if you look at price action, it was a good time to take the trade because of like what we already did. We moved up a lot in Tokyo. It's like, okay, London was kind of bearish, but not so much. We had this rejection candlestick here. That would have been a good, I would say that would have been an okay time to think like, yo, we could go bullish. I waited a bit longer, and like usually I would take a trade on a candle like that. I can't say there's like no super reason why I didn't, but like crazy what gold ended up doing. It ended up wicking all the way back down. Like there was a pretty good 1 hour close here. It is like doing like a break and retest. This is where when like being numerical with your stop loss size might be like something that's getting you stopped out on trades if you're using a certain amount of pips. Because it's like, okay, I mean the best place to put a stop loss in this case would maybe be below the wick, still stopped out. Where it's like the place that we probably wouldn't put a stop loss would be at like the previous low, because it's probably like too many pips. That's pretty far. I mean, $15. Previous structure can always give you like breathing room. I mean, $10 is I think minimum, like a good size, but even that would have got like stopped out if you're taking entries there. This is where like when you get a rejection candle, it's good to look at the price that it's around. It's like, okay, 3,400 is down here. This is when you get like, let's say a rejection candle. It's still good to try to create like a zone and get a lower entry so you can have a farther stop loss in some instance. Like this was at like 39.20. 39.18, or what was that at? 39.19, 39.17. So it's like if I'm there, I want 39. I want sorry, this was at 31.17, 31.19. The price that I really want would be minimum 43.15. Let's just say 3.15. I don't have to enter immediately after that rejection candlestick. It's like I still want to try to maybe create a zone $5 below. This is where you might find some better accuracy or better entries or more patience in your trading. Entering after, it would have went up in profit. You would have got some profit there, but it probably would have been a stop loss or maybe closing your trade in panic, right? So if you're getting a good rejection candle, you can still try to measure it with getting like a good whole number that's near you, maybe like 43.15, or can the market go back to 43.10? Because at least if I'm at 43.15, now I have an entry there. That's when it came back here. It's like, okay, total different entry. Maybe stop loss size can be refined. Or if it's like if I could get to 43.10, I mean, that's the type of candle we want to look for entries after. It wouldn't have worked there unless you were putting your stop loss, unless you're entering after, like at a different price, like trying to get a lower price. But let's say you're entering after, you would have had to put your stop loss like at the previous low. So that could be like a learning lesson. I feel like there might be some people who I don't know. I waited. I saw that candle. And then when I saw the second one, I was like, all right, I'm going in. Like I saw that candle, and I know I saw it go up afterwards, and I was probably like, damn, I probably missed the trade. So I put my phone down. I remember seeing this candle, and I was like, "Yo, this looks pretty good. Like this looks nice. It looked like good on the 30-minute." And it went up, and I was like, all right, I might have missed it. I didn't even see this candle until like it was closed, because I sent a trade at like 6:58 this morning before New York session. 43.16, 43.12 area. So you can even see I'm trying to get like a bit of a lower price still. Like I saw this candle close and I was like, all right. I was actually gonna send it, like when this candle closed, the market was at 43.18, and then it went to 43.16, and that's where like pretty much market was when I sent the signal. It went to like 43.15. You could have got like a little bit of a better entry. We had that trade. It spiked up, and then it went down, and then the next candle just skyrocketed. So when I saw this candle, like I saw this candle, and I was like, I wanted to enter. I was like, this is a good candle, and I didn't. I would say maybe I wasn't fast enough. Maybe I was pretty tired. Like it was like literally like going to bed, like shutting my eyes time. Like I was pretty tired, so I wasn't as like on it. I think if I was like way more awake, I probably would have sent a signal there. But I don't know. I waited a bit. Once I saw this candle, a couple hours after, I was like, all right, bet we got a good rejection here. Like we had two good wick rejections here. So these are called long wick. Anybody, if you guys are on like that masterclass I did, I talked about this. Anybody who's in the inner circle, we've talked about this a lot. We've talked about long wick rejections. There's literally videos on it inside the inner circle. There's probably videos on it on my YouTube streams. We've talked about long wicks a lot. They had two of them here. So I entered after the second one. Right, stop loss. Stop loss went pretty much like at the wick. This is where now I put my stop loss at the wick, and this could have been a pretty good trade. Like it was, like I mean, it could have been if I held it a bit longer. Like I got out like here. So execution is key. You don't have to judge your trading by how many trades you take, how much money you didn't make, or even just P&L, like your profit. Focus on the entry, the confirmation. I mean, this trade, if I took a trade here and I lost, like I don't know, I didn't see this happen, so it looks like it happened actually really quickly. So I might have not got stopped out, because like if I was taking a trade here, I probably wouldn't have got stopped out, because it might have happened really quickly, and usually I just close my trades manually. It was a fast wick. Market accumulated there. It shows you like the power of sometimes not being on the chart for a bit, keeping an eye, like having a bias. Like I knew there was gonna be buys. Like that's what I was thinking. Those rejection candlesticks, but like you can literally see the structure held. The structure actually held like perfectly. When you look at this whole part of the chart, nice like accumulation here. That price built up. Like and like you could almost look at it like some break and retest. Even right now, like this is still holding bullish at the moment. Like price still looks bullish to me on gold. It wicked down like I was debating on sending another trade this morning at 43.25. So I'll show you guys how you could have caught another trade here. Like if you look at the market structure, it's bullish, right? Like you could have caught another trade here at 43.25 this morning, using everything I teach you guys. Like market pushed up. There's the engulfing candle. Look at the engulfing candle. I caught that. I was like, you know what? Caught a fire trade. Anyone who took it, like I sent it to anyone that's in the Discord. Anyone who took that trade made money. If you took that trade, it was a fire trade. So I was like, you know what? That was a good trade. Let's keep it at that. I knew in my head, because of how the market moved, like I was like, there's probably another entry at 43.25, and you can literally see like gold came right back down to 43.25. There's a lot you can learn from this week. if you get emotional about the market and you're like, oh, I had a bad week, oh, the market's crazy, oh, it's December, oh, this, like, you know, you'll just stay in the same loop, and you'll end up in the same loop from time and time over and over again. There's actually a lot to really learn, even just about this week, even the last 3 weeks. I have every trade I've taken, and every trade here that I've sent out, taken on gold this month, and there's all those trades and even plenty more different trades that we could even learn from. Like, look at this morning, 43.25. We talk about these, right? We talk about these price levels very, very often. Anyone who comes on these streams should know why I'm highlighting 43.25, right? 1 hour time frame, a good amount of them. If you come on these streams, you know why I'm highlighting 43.25, right? Look at that. That would have been, like, you could have, so 1 hour, yeah, 1 hour rejection's pretty solid for day trading gold. Like, we're looking at the 1 hour kind of right now, but yesterday I was doing some training on, like, the 5 minute for pure scalping, which is totally different. The 1 hour is pretty solid for, like, rejection candlesticks. Like, if you're looking at bullish or bearish, what is a rejection candlestick? That is something like this right here, bearish. Did I put, let me see. Did I put it in here? I have another one I wanted to put. Did I put it in Discord? I gotta put the bearish one. Let me see. Did I put it in blueprints yet? Let me see if I can upload. Let me upload it right now. Here, hold up. Wait a minute. See if I can find it quick. Should be able to in like a couple minutes. Bam. All right, there you go. So rejection. This is the type of stuff, evidence on the chart that if we can see, can help us enter trades properly, more accurately, better timing. It's the types of things we want to see on the candlestick charts, and 1 hour is a good time frame. That could be okay. So if we mark this chart like right here, here's a rejection candlestick. Now that also has a very long wick to it. So there's a long wick there. Longer wicks can lead to like good, faster rejections. Like you can see on this chart different times where there's longer wicks. Like here, there's a long wick. So long wicks is a different type of rejection as well. Like you have this green candle here. Green doesn't always have to signify bullish in a candlestick, depending on where that candlestick's location is. Right? If the location of the candlestick is high. So what is resistance in the market? Resistance could be resistance as most of us traders here know it. Or resistance could be just a high price, right? It could be a higher high in market structure. A higher high. Basically like a supply zone. Long wicks could signify rejection in the market. You could have green candlesticks that form these types of long wicks around a higher point in price. Like maybe price broke out. Like see here we have like price broke out of this resistance here. It made a very strong break above resistance. Create these long wicks. So you have the long wick rejection here, and then you can see this candlestick right here. That one has like that body rejection. So like there's two types of rejection here, right? You have the long wicks and then you have the body. So you could have entered like a trade after that rejection. Stop loss at the wick. Now that would have been crazy because you literally would have caught the fastest sell, honestly, on a 1 hour candle. So that would have been a crazy sell right there. Next, there's a inverted hammer. So right here you have what's called an inverted hammer. It's basically think about a hammer candlestick, but opposite way. It's inverted. Imagine if this candle was the opposite way. It would be the wick at the bottom, the small body. So there you have price rejection on that candle. So the trade could have been taken like after that candlestick. And I mean, there could have been the next candle up, some profit there. Let's look at the sells for now, the sells, and then we'll go to the buy. So right there you have a nice rejection candle. That happens after the market makes this extreme move up, takes out these highs. Now the price it's happening around, that's also happening around 43.25. You see 43.25 there, 43.25. All right. So the wick goes above that. So the price level. Think about how there would have been an extreme green candle. Well, this would have been a green candle. And then it came down. And then this candle was going up. And it failed to go higher. And it rejected. Comes below. That would have been a good sell setup right there. The same setup basically happens here. Like these two candles here. There's a long wick rejection. You have these two smaller bodies. And then you get the red candlestick, which is bigger than the one next to it. You have these two candlesticks here. So on an hourly, if I'm just looking at an hourly, I'm not looking at a 5 minute, 15 minute, I'm not looking at any time frames. Let's just say the only approach was looking at the hourly time frame. Like if you want to narrow your trading down to being very selective and not being all over the place, maybe you feel like you're all over the place. You can't make adequate decisions. You're constantly making decisions on one time frame, another, and things aren't lining up. Maybe one moment you're trading the 5 minute, and then you end up missing that perfect 4 hour trade setup. You're all over the place. Limit yourself to the time frames you look at if you want to narrow things down. Give yourself, okay, imagine if you could only look at one time frame. What time frame would it be? Imagine if it was 1970s and some type of shit and we only had one time frame we could look at. I don't know. Just imagine if that was a rule that was just imposed upon you, that you could only look at one time frame. What time frame would that be? And then start there to look for your trade setups. Maybe that's the hourly, maybe it's the 4 hour. For me, when I asked myself that question 5 years ago, it was the 4 hour. So the first time I asked myself that question was in like 2020. So almost like 6 years ago, actually. I asked myself, you know, let's just limit myself to a time frame type of thing and say, because like you don't need every time frame to find setups. When you limit yourself, you add more patience to yourself. When you limit yourself, you maybe go at a different pace, and that opens things up on other time frames even so more. So for me, when I asked myself that question years ago, it was the 4 hour. I was like, let's just stick to one time frame. There was one point in my trading I just only stuck to the 4 hour. And I was like, that made me more narrow. So that you could even do that. Like your trading doesn't have to be all over the place with time frames. Like limit yourself, even give yourself 1 month of only looking at the 4 hour, the 1 hour. Like for the trade setups that you take, don't try to be all over the place and be a wizard. If you're looking at sells, you have rejection candlesticks, nice ones here on the 1 hour. There's even like one here. There's been a couple sells. Even like there's a fast one this morning. There's even this is like an inverted hammer almost right there. So there's been some sells on the 1 hour. Created a big wick though. Huge wick. Phew, spicy. That's New York session for you. New York session is volatile. So the difference between like London, Tokyo went up a lot last night, but it's not super wicky. The difference between like New York and the other sessions is the volatility, the fastest, the speed. New York can be wicky, whip, spy. So rejection can be looked at like in the candles. Like you could have this is rejection right here, right? Look at these two candlesticks here. Now it's like also the price. If we talk about price, 4,300. Even here, like, so a lot like I like to look. Someone asked in the chat about 1 hour rejection. Like, yeah, like I like to look at the 1 hour rejection a lot. Like, I took I think I took a trade here. Yeah, I took a trade here on Monday. That was one of the trades I took, and I was entering on the next candle. I took it. I think we took it after that candle, maybe a bit before. Or was it the 30-minute on that one? That one might have been the 30-minute, actually. I think I took the 30-minute on that one. Got a trade here, though, at the beginning of the week. Monday, literally. That was, like, the first trade. Yeah, it was a 30-minute rejection. Because I entered below 4,300. We caught it on this rejection. So I'll mix it, like, between 30, 1 hour. This ended up rejecting on the 1 hour perfectly though. And like I could have taken a trade after the 1 hour here. Like there was a good 1 hour rejection around 4,300. You could see like here's a point where the market like see what happens here and here. There's a difference in how the price recovers itself. The candle. Like here it breaks. And it goes up a little bit, but it doesn't close above. Now, here it breaks. And the next candle closes above. So that's closure right there. Like, and the reason I'm highlighting this is because this is at, if you notice, 43.25, 4,300. So hourly is it might seem like sometimes you're late because the 30-minute might reject before. I like to kind of mix between the two and see what the time frames are doing. This would have been a great trade right after it wicked down to 4,300 over there. They created literally broke above. So like if you go over here on a 5-minute. There's a beautiful trade here on a 5-minute at 4,300. That was early week. Like I caught my entry down here. Once I saw the 30, this was like the 30-minute candle rejecting. But even so, like there could have been a good trade right there. So I was, 4,300 held for a bit. It's held this week pretty much. Like it went below 4,300. Like we went below 4,300 a bit this week, and now that was it. We were pretty much gone. Remember what I said Tuesday? Remember what I said yesterday about how yesterday was NFP, and I was like, yo, today's NFP, like you might see this go up the rest of the week. Maybe it's I think it's gonna try breaking 43.50. Someone asked in the chat 43.50. Like, because we've touched it so many times now. No, yeah, we've touched it more than once now. I think there's force there to break out. I feel like it's gonna break out. I don't know about the sells now. There's been some selling opportunities there. Even this morning, it almost hit 43.50 pretty much. My personal bias, personal opinion, and how I feel is that we're gonna break 43.50. I don't know, price price has been tapping that 4,300, and honestly, guys, it's been like the simplest trend with gold. This is why you don't overthink things and you just follow simple stuff. Like literally here. Remember when we were talking about that high, bruh, like weeks ago? It's pretty much just been trending, you know. It's been a pretty simple trend to not overthink. If you guys have been overthinking the market this month, like just look what gold literally did this month. And we talked about how this could happen. Things just take time to happen sometimes. Like if we look at, we were looking at this over here saying, yo, gold could probably go up to like 4,300, 4,340, even up here to the high. Things take time to happen, right? It's not going to happen in one day. It's not going to happen in the hour you're looking at the chart. But like for that whole week, we were running down like this high here. If you go back on the streams, I was talking about this the entire week. We were there, how there's good buys here. And like, you can only talk about things for so long until it leaves you. And then, you know, a lot of times people forget about things and you're looking for the next setup. Sometimes you got to kind of like stick to what you were originally kind of looking at when the market first arrived at that conclusion of, okay, the market's here, I see this right now, right? A day goes by, it could still remain what you see on a bigger picture. You don't have to always jump to a new conclusion or a new thing until the market really shows you like, okay, it doesn't want to do that. Because when you look at gold now, it's just been kind of like a simple trend. I don't know, someone asked about 43.50 in the chat. I feel like we're going to try breaking above 43.50. We've tested it a few times. Pretty interesting, like how gold's trading, yo. To be honest, to me, it's pretty interesting. Like we're testing it. Tested it a few times. Obviously, it's like all-time highs around here. 4,400. Is that the next price? 44? 4,400? Maybe so. Maybe so. I think we might try to break it, to be honest, guys. Like, I don't know. Gold, look at the way gold's been trending, trading. It's strong right now. There's a lot of demand for it. Chart feels strong, looks strong. Could try to wait and see if it might try to break above there. And there's, like, if you remember, where was it? There's resistance here. Yeah, it's touched like 1, 2, pretty much like 3 times now. Big retracement. It's either that or we break. Like it's either it's either waiting for like a big retracement. See where price is London session or before New York session tomorrow. Otherwise, it might, if it does the big retracement or we break above here, like I don't know. I'm seeing force at this level. Like look at this. Even right now, price is just kind of. The last hours has just been going up and down. Last few hours, up, down with price. It's an interesting level. It's all-time. No, it's all-time highs. I just feel like there could be a breakout coming through there. Price seems strong right now for gold. And that would be like the leg up. If we can get like a breakout through there, that would be the leg up to go to like 4,400. Closer to 4,400. Probably like 4,390. That would if that happens, that would like set the move to go to 44 or 43.90, closer to 44. What's GC at? Yeah. Gonna tap 44. I mean, this would maybe break that. Gold's broken out though, for sure. Like this thing's broken out, like, like. Maybe there's time for that this week, or heck, January. Maybe January or this week. Like, look at Wednesday night. Still got Tokyo session. Then we go Thursday, Friday. Still got until Friday. Maybe this pushes up one more time, breaks through. Look at the last few hours. The last few hours have been pretty. Like this morning moved. Like, yo, it was a pump this morning. Like, this thing had a solid shot this morning. Like this thing moved up nice this morning. But last few hours have been pretty chill. Just kind of consolidating from my eyes. What my eyes can see. Remember, I got 10-year eyes. Remember, like I got well, 11-year. I keep saying 10, but like 11-year eyes on the chart. So my eyes see things. That's what I'm thinking, y'all. Or I'm just waiting for a fat retracement and just chilling. Like, I don't know. I'm not gonna buy here and force it. Wait for a breakout retest or like a fat retracement. That would be the next move to 34. Like it. I've seen gold like this a lot. There's like, it was like this. I remember when the market was making even just like this resistance here. We were talking about like the same thing. Or even this, see all this resistance? And those are around some like key prices. I'm gonna break out, like, see these types of like range. See when gold does this stuff, when it makes like a lot of touches at one level of resistance, it'll usually like break out of it and then it'll dump. It's probably what'll happen. It'd be like, yo, chase the buyers up and then like retrace end of the week, maybe. Friday retrace. We had a Friday retracement. Like, look at where the market was, and like think about how we moved last Thursday and last Friday. This was last Thursday and last Friday right here. Bam. Thursday moved up, consolidated, pumped up, and then it retraced. So like, there's potential for that. That's kind of what I'm seeing. Like maybe it's Wednesday night. We're going into Thursday. What last Wednesday this time? Yeah, we're at a higher place. Big retracement happened last Wednesday, and that was like with FOMC though. There was a big retracement, and then price pumped up Thursday morning, New York session, and then Thursday night, and then Friday pumped up but retraced. Maybe there's a break of 43.50, and that gives like a quick move up, some expansion. That would be like how we create the next. That'd be one way to create the next leg. But yo, like gold literally created just this like consolidation up, down, up, down. You can see this here, this rectangular pattern. Up and down, up and down, up and down there. Gold created all that movement. One moment. There we go. It's kind of doing the same thing again, sideways again. Like if you look at gold, spent the beginning of December. Rectangle here. Broke out of that. And we're in another rectangle now this week. Probably going to try to break out to the upside in the rectangle. That's what I'm seeing. That's what I'm feeling, seeing. If you know what I'm saying. Yeah, pretty much like, again, rectangle pattern. We broke out of that. Look at this week, this past week or so. Up, down. Could try to break out. I do warn you with that. Now that it's tested this level a couple of times. Before we went down, down. Now we're just going, trending up to it more. So if there is a breakout, it could be a good retest area. Trust. Keep an eye on it. Trust. Gold can do that. Like if you're someone who likes to watch gold, which is probably everybody here on the channel, there's many times you look at gold and you're like, what the hell is it doing? Holy, it just exploded, or it just price exploded, price went crazy. Next thing, like you look at it one moment after another and it's moved hundreds of pips one moment at a time. So from my experience with gold, it's like how I build anticipation for things is just from a lot of the things I've seen. Stuff like this is just like, you know, from past experiences of being able to like anticipate things moving forward with gold's type of movement, because like I said, it can be explosive. Either that, like waiting for that, or just, yeah, pretty much like sitting on my hands, letting price do its thing. Caught a good trade this morning. If it breaks up, gonna look for like a retest. Gonna watch price closely. Because yo, now it's like up and down, up, down. We got a couple trading days left, and then we got next week. Next week might be a boring week for the market, realistically, like bank holidays all across the board from Wednesday up until Friday, and then even the following week, Wednesday to Thursday. So January 5th is where things kind of maybe start to flow again. Bank holiday there, Sunday, so market, nothing there for anything. So we got a lot of bank holidays this upcoming weeks. Next week might be boring. I mean, we'll see. There's some NZD news happening in 24 seconds. All right, guys, let's whip out NZD, USD, and see what happens here. Yeah, now I saw there was NZD news right there, and I'm like, it's positive. Good for forecast. All right, we just got some NZD news, guys, that came out. We're looking at NZD USD here. We broke out the downtrend. This thing was in a long downtrend, as you can see. Nice one, clean. Damn. Should have been trading NZD USD here, or here, or here. Broke out the downtrend, and yeah, look at, we have shifted out the downtrend. Huge run up. This thing is getting ready to go one day again. And yeah, we've been retracing yesterday. Look at that rejection candle on the daily. NZDUSD. Bullish. Alright. That was random. GU. We went over that the other day. Yeah, there hasn't been like a direction this week with gold, but it's looking bullish right now, like because we had like the NFP yesterday. We had non-farm payroll yesterday, and since that it's created more trending structure versus like before NFP it was down, up, down, well, up, down, down more aggressively. Now it's like created more of like a trending structure in the market. I might hold this high here. Like we got like a break and retest area there. I'll make that a different color. Make it yellow. You can see we're holding that area right now. Maybe like in the short term that would be like a good retracement area when market opens later tonight. Still, like I said, we could probably break above that area, or yeah, like a retracement down, maybe retest this zone one more time to go up. I don't know, sticking with gold bullish has worked consistently for me, so I'm just like sticking with like what's working in terms of like the side of the market for me, what's been working more. So just gonna like stick with like the things that have been working, the bias, like so. Don't have to like force trades, guess trades. Opportunities will present themselves, but if I see something, it's like, okay, I could go for it. But like the overall bias has been working for me. It's like every time I'm looking for buys, gold will go up. Or even like today I looked for buys, last week was looking for buys, and like price goes higher and higher and higher. Whether I'm looking for buys or not, it's like price goes higher. If I'm looking for sells, price ends up going up higher after the sell. I'm like, damn. So like for me, keeping like the bullish bias, but still waiting, not just being bullish all the time, right? Because there's obviously sells too that happen, but just like waiting for bullish scenarios has been working for me more so these last weeks. So that's just what I've been sticking with. And like I've been buying since like end of November. Like I've just been like we were catching buys in here. Like I called out buys like in here. If you go look at my trade breakdowns on YouTube, like there's some buys that I was, man, like there was some crazy trades I called out in here. Like where was it? Like here, I think it was. Yeah. Like I called out a buy here. I remember calling out buys down here. I called out buys like here in this like area. Like there's all these areas down here. And it's like I've been looking for the buys, and price has gotten up to this point. So it's like for me, I've been on the right side of the market too. So I just want to stick with kind of where the market's been too, for the side that I've been aiming at, everything I've been aiming for, like trading. You could go back to the end of November. I've been calling out buys since down here. I called it a buy literally down here. There's a lot of good trades I called out. I don't even remember them all. If I went back, I would be like, wow, I remember those. I remember that. this morning. Called out a buy down here. You could still be in it. A lot of the trades that I call out, like, it's good to not always aim for. Like, if you notice a lot of the trades, like, I put myself in good setups, profitable scenarios. But I try to get, like, if I'm day trading, scalping, like, I'm not trying to over target every trade. If I'm on the right side of the market, it'll move. So I'm not always trying to, like, over target my trades. Like, I'm trying to hit full take profit, and majority of the times, like, I'll hit full take profits and the market will keep going my direction. But what's worse is, like, over targeting something, trying to, like, aim for a number. Like, you don't want to over target something aiming for, like, a profit number, like, all the time. Focus on the execution and the market will, like, give you the move. If you're focusing on, like, a good entry, positioning yourself. If you're positioning yourself in a good location, right? Like, I added this one here, but, like, or where was it? The first trade I took this week. For instance, like, this trade right here. For instance, let's go back to that one for an example of what I'm talking about. It's better to, like, hit full take profit and, you know, maybe the market go a little bit more afterwards. That trade, so let's go back. Oh yeah, I keep forgetting where it was. Here, Monday. Yeah, bam. This candle. So entry was here. My take profit was right there. So for instance, stop loss was at 84. There. 90, 42, 93, 90 area. So, like, it was on that wick there. Take profit 3207. And like 84. Yeah, I think it was 84. Or was it 80? 85. So for example, like, this trade hit full take profit. And that's it. Like, the market went beyond that. It went farther. It's better to give yourself, like, targets that you're like, yo, it's more likely to hit this. Like, it went right to that green candle perfectly. Than trying to go for a certain number every trade. Like, I have to make this, or it has to get here, or I need to put my take profit all the way up here because only then it will be worth it. As long as you're good at consistently putting yourself in profitable outcomes, profitable positioning, right? Like, you'll put yourself in trades that will go beyond your target. Like, that's usually, like, a lot of my trades. Like, this target was hit at here, and the market went beyond that still. But it's better than, like, taking a trade that you have, like, huge expectancy. Like, if you have a huge expectancy for every trade, you might be trading more emotionally. There might be more emotional attachment to that trade. So I find, like, I don't, like, not every trade I send out, like, you can see, like, this was a good trade. Like, it was solid. That was a fire trade. It went 170 pips. Like, you could have caught, like, for the move it was a $17 move. Like, $17 move. You could have caught $26 move. It was a good trade, right? But it's not like I go to every trade like I have to catch hundreds and hundreds of pips every trade. It's like, let's get the move. We got the confirmation. Let's try to catch a move. I think the entry, is, like, a key thing. Like, where you're entering at, where you're positioning yourself. That was a solid trade. This thing went up a good amount. It's like I don't have my take profit up here, and I'm like, it has to hit it, because otherwise I might hold on. That's how you end up holding on. Like, that's how you let, like, winning trades turn into losing trades, or you're trying to hit a home run. Buy from 42.20. Nice. Nice, nice, nice. Where's that at? 42.20 down here. Yeah, we had a trade here. I gotta do a breakdown on that one. I'm gonna record like 2-3 videos today and post them in school for those of you guys that are in the inner circle. This was a fire trade. We took a buy here too. We had buys at 42.11, 42.08 in here. So like, if you're positioning yourself and you want to catch hundreds of pips on a trade, you kind of just have to be unemotional to every trade and just go break even, but not break even if it goes like, I don't go break even if a trade goes into profit. I just hold the trade. I just hold it. Like, I don't move my stop loss. That's how you usually get like wicked out with gold if you do that. We had buys in here literally last week at, I think it was, what day was that? The 12th. That was a fire live stream I did. There's a lot of trades that I send, have taken, or done like live here, but there's a lot of signals I've sent, like literally that. Here it is, 42.11, 42.08 area. We had buys in there on gold. Solid trade. And I mean, that trade worked for the day. Like, it hit all take profits. It's like, okay, it smashed the take profit. I ended up getting out a bit higher. I ended up getting out like a bit higher because it was just moving fast. That trade, I was out of it once it made this move. So I was out of it like here. Once it like made that move up, like, I was out. For that day, I could have held it longer. So for the time being, it's like, damn, I could have held it longer for the day. I could look at that same trade right now and be like, damn, I could have held that trade longer up until this point, right? Or whatever, right? So if whatever trade you're taking, like, if you're trying to catch hundreds of pips on a trade, you're probably just gonna have to hold it. It's just maybe more about holding it. If you're on the right side of the market or you're positioning yourself well, it's more maybe just about holding time. Because if my average holding time is 3 hours, maybe it takes 5 hours, 7 hours, or 8 hours to get that more movement. Like, that trade worked for like the day, but even in the same day, it was like, even in the same day I closed that trade, I was like, damn, I should have held this trade longer. I could have looked at the trade a week later, and been like, damn, or right now I could be like, well, what, you know, if I could go back and be like, what if I was still in that trade? I'd be up 1,200 pips on that trade, $126 move. So you might have to just put it in set for yourself, like, yo, like, I'll just go break even every trade, or just try to hold longer if you're trying to maybe maximize, because it doesn't matter. Like, I could go back to a trade I took there last week. I could go back to a trade I took today, the trade I took today, and I could still, like, it's not every trade's going to be perfect. Not every trade's going to be like a perfect exit. You're not going to, you know, if you're trying to hold trades longer, maybe one thing I've recommended, or even just kind of said in the past, is like, if you have two accounts, you have like a swing account and just your regular account, just how you already trade, right? You take the same trade on each. So like, when you're day trading, so your regular account is like day trading or weekly trading, I don't know. Swing account is like same trades. I take my day trades. I don't know, your day trades or your weekly trades. I'll just hold longer. So it's like take profits, hold longer. So it's like your day trading, you're getting, you know, in moves daily or every other day through the week. you take the same trade on both accounts. You take the same trade on 2 different accounts. When, let's say, the day trading account, market goes into profit, you take your profits, but you still have that other trade on the other account. And you just hold it, maybe for a longer time, a couple more hours or a couple more days, something like that. $20 orders, yeah, I do multiple orders. Well, lot size just depends on like your risk tolerance. I mean, I think it would be good to ask that question to like everyone here in the chat too, because I don't usually trade with $500, but I don't know. I'd probably start I'd probably start with like an 0.05 or like a 0.1 personally. Like, but I wouldn't just put one order. Like, I would go like if I was taking a trade, I'd probably go like 0.01, 0.01, 0.01. I'd probably take like 0.01s, but multiple of them on a trade. 0.01s. That's how I would probably do it if I was trading like a 0.5 lot size. Maybe like a 0.02, a 0.02. Stack up a couple different entries. But I'd probably trade, me personally, like I would trade in that range. But I mean, start within a range of like lot sizes 0.01 to like 0.05. Try to gain, like, because everyone has a different risk tolerance, so try to gain like some control of like the market movements, how the lot sizes move. Try to feel like how you react to the money moving, like the difference maybe between 0.01 and having like 0.05, like how the money moves. Gold's really volatile right now, so starting out, I would start with the smallest lot you can trade and just get a feel for how the market's moving too. Depends if you're trying to flip the account too. Like if you're just trying to go all trying to go all in on a trade and flip the account. I'm kidding, but we've seen people flip some accounts with like some crazy numbers. Yo, a lot of you guys. Yo, we had a fire gold trade today. Did anyone who caught that gold trade? I hope you guys caught that trade today. Some of you guys say I send trades too late. That was early morning, yo. Some of you guys say I send trades too late. All right, today's trade was today's trade was too early. It's like, that's what I hear. Today's trade, it's like, you send them too late. Today was too early. You can't have the. Sounds like my girl. That's how my girlfriend sounds. Like, that's how she sounds. Yeah, you sending the trades too late. I'm not awake. Or you sent it too early. I slept in. Like, yeah, the best of both worlds, right there, eh? Tell me about it. 6:58 in the morning. Money don't sleep, yo. Money don't sleep. Some of you guys gotta learn that. All right. Some of you guys gotta learn that. It's too early. It's like, damn, yo, now it's too early. We start sending them at 4 p.m. in the afternoon, random time that doesn't even make sense then to the market, and then we'll see if they win. We'll start sending them at 3 o'clock in the afternoon, and then we'll see if the trades win. Not even 4 a.m. Hey man, 6. I was awake. Think about. I was awake before that. I was awake at 5, 5:30, 6, keeping an eye on price. I was saying money don't sleep, and the one thing about the market is it's not gonna arrive on your schedule. That's the thing. Like a lot of times, like the best trades, like they're not gonna arrive on your schedule. That's the thing of the market. Like, yeah, it could be optimal to pick a time to trade that's convenient to your leisure. But sometimes that you might be late or you might be too early in a case of timing. I'm good at kind of sensing time with the market, like when to show up. But that's the thing about the market. It's anyone who tells you like I mean there's people who trade indices, which is different because you show up like like indices. It's like you have a window of time where it's they're gonna move. Whereas gold could move Tokyo, London, and New York. So you kind of have to be like keeping an eye on it without keeping an eye on it at times. So like Monday to Thursday for me, it's like different than my Thursday to Monday. My Thursday to Monday, I'm sleeping more, recharging more. Or even like Tuesday to Friday, Monday to Thursday. Monday and like it's sometimes it usually compounds to a couple hours a day, but those couple hours a day when you get really good at it add up to money. Money is the easiest way to say it. And that's the thing with gold, and like you get better, like the more hours you put into the chart in your beginning stage is like the better you get over time. Like you get more efficient at looking at price without having to be on the chart all the time. I mean, if I wake up in the middle of the night, what do? I look where price is at. But obviously, I remember where price was before and maybe what I'm thinking about the charts. Crypto is cooked, right? Yeah, it's all good. It's all good. It's all good. Yo, damn. That's some crazy stuff. I'm happy I'm a gold trader. And just do like crypto spot mainly. Traded some leverage crypto, but I'm happy like my everyday thing is looking at gold that I geared into that years ago. Before I even made big money on crypto, I started focusing on gold in like 2019. It's pretty cool. Hey man, money don't sleep, yo. How often are you taking multiple entries? Manual? Usually manual. Like I'll look at price kind of every 30 minutes, every hour. Like I don't know about you guys, but I'm on my phone a lot, so I, scrolling. So I'm usually looking at my MetaTrader a lot. I might look every 30 minute or every hour at times. But like I'll just look at where price is. So manually I enter. I'll wait for pullbacks. Like I'll enter a few positions and then I'll go away for a bit, not look at price, keep myself maybe a bit preoccupied. Yeah, that's one thing. Like in the beginning for me too, when I was trading in the beginning, it was like I couldn't really focus on New York session the most. So I was like a London session trader. Gold's pretty cool because it's diversified, so you can focus on it at different times. We're probably gonna come back to like 43.25, 43.30 area. That area that I just drew on the chart. Price has just been consolidating today. I'm wondering if we're going to take out these highs. Like if we come back down and maybe take out those highs. We're trying to get like a down move before an up move. But yo, I'm going to wrap it up for the day. I'll be back on in 3 hours. All right. 3 hours from now, which is Tokyo session. I will be back on. So make sure you guys come back on 3 hours from now. 3 hours. All right. We'll be back in 3 hours. Not too long. 3 hours from now, Tokyo session. Let's see where things are at. Let's go over the market, see where things are at. If there's any setup, we'll probably just be on for like an hour tonight, maybe 45 minutes, an hour tonight. We were on for a little while here today, so we'll probably just be on for like an hour tonight. But 3 hours from now, we'll come back on. I'll see everybody then. We'll see. Like, I mean, right now, not really time to look for a trade, but like, if I'm looking at gold right now, it's just pretty much been. Let me look at the weekly real quick. I want to see something. Oh yeah, look at the weekly now. Oh, yo, like are we trying to get above this high? Like, you see, even on the weekly, it's looking interesting. See that? It's looking interesting, even on the weekly there. Excuse me. Bless me. Whew. Even the weekly, look at the weekly chart. It's like above there. Weekly doesn't even look bad. Like, it's trying to push up. That weekly looks interesting. Resistance to the left. I think my chart is gone now. Yeah. Probably gonna come down. Let's check it out tonight. 3 hours. Plug back in.